for this. Okay, so here we go. Now, what we're going to do here is the full map price of euro and the pound if you prefer. But like I said, I'm here with Sam from Nigeria, and we're trying to work out the full strategy from now till the end of the year. But like I said, on these times, we have to take it month by month because we don't know what's going to happen in September. And there's only two ways to do this, either by speculation or by keeping a full strategy like we've been doing. So let me grab this. So now we're going to focus on euro dollar at this point. So we're just going to go for, first of all, the interest rates situation. All right. So we know the euro is pushing rates up, and we know the US dollar is doing the same. They're all increasing rates. Okay. So now inflation of the United States, it is improving. They're actually lowering inflation. And that implies that for the meeting of September of the Fed, they might not do a hike rate of 75 points, but instead they're going to do it 25 or maybe 50 points on the meeting of September. And that may change everything for us. So basically the US situation, inflation is getting better, recession, it might not even happen. And then in the meeting of September, they might hike the rates, but not as far as they say they're going to do it. Okay. Now we have, on the other hand, euro. Inflation is just not actually getting better. It's actually pretty much the same. And they're hiking rates on the path they say they were going to do it. Okay, so the euro area, it's not much going on for us in terms of macroeconomics. How about the UK? UK, it might enter into a recession. It might enter into a recession. We know that. Now, we have the information of UK tomorrow. We have inflation of UK. Sam, you have to remember this. Tomorrow, 3 a.m. Eastern time, the UK is presenting inflation. And that's going to be huge, okay? Big opportunity. Tomorrow, 3 a.m. So you can please ask me anytime. All right, so inflation is coming. And it's not supposed to be good. So we expect a bad number, bad inflation for the pound. And that might lead into a future recession because they're actually hiking rates, but they're not doing anything to the economy. They're not actually working on inflation. So they're just hiking rates, not making any results on the economy. So that's a big deal. We had to consider the UK enter into a recession by the end of the year, or maybe even earlier than this. All right, so that's pretty much in basic terms what's going on with euro, the dollar, and the pound. All right, so let's go to the market now. Let's see what we got. So what you see here on euro, this huge hike on the prices, that was the result of the US inflation information. The reason is why, if the inflation is getting better on the US, the euro went up, but the dollar went down. And that's exactly what happened. Remember that the market always discounts the information, and what they assume is that if the inflation is getting better in the US, it means that maybe they don't have to hike the rates anymore. Or if they do, they're just going to do it at lower pace, you know? That's the market conclusion. That's what they think it might happen. When? In September, which is the next meeting. And honestly, this is one of the last meetings that are going to be very important for us in market terms this year. So what happened later? Well, of course, the euro went down. you know? So that was a huge hike, which we did not get any from it because we're still gonna go short. Our main strategy on euro is short, all right? Also on the pound, GBP is short. Main strategy, it is only sell, all right? So now that means that if the market goes up, we wait for the market to get out of the euro, out of the pound, so then we can short. And that's what we did here. Just two sessions later, the market actually went all the way down, exactly the amount of the buyers. And that's been very repetitive on euro and the pound for us since the war. So the economy is not recovering on UK, it's not recovering in Europe neither. The buyers are only a speculation based on the dollar, but not based on things are getting better for euro or the pound. And that's not changing. Okay, so we keep the sell strategy on euro, we keep the sell strategy on the pound, we forget about the buyers for a while now. Like I said, the war, I was trading the market 113.50. We're not even on that recovery. The closest recovery was 1180, and that was it. That's it. So keep this in mind, because we have in mind that the euro must go up, the euro is stronger, the European Union is stronger, whatever. But honestly, there's no sign of getting even better, or the production getting better, or inflation improving, or nothing like it. Just keep in mind that. The main strategy on euro is that if the market goes up, we can take our chances buying, but we have to expire. As soon as it starts dropping the price or just closing break even at the price, you know, we rather let the buyers get in the market. And when they basically take their profits out, we do the same and we join the seller. We don't join the buyers. Okay. So I'm going to take you to the pound dollar now and see what we got for tomorrow, because this is going to be huge. That's going to be really good for tomorrow. So pound dollar, same situation. What you see here, that was inflation of the United States going on. And then just two trading sessions later, like basically this trading session and that one, and then that was it. Pound is down again. So remember, when the market goes up on the pound and the euro, make sure that it's because the economy of UK or Germany or whatever country in the European Union is showing recovery, not because the dollar is making changes. You always know, dollar leads everything. Okay.
Okay.
So what's the strategy for tomorrow? Remember that we're still using 15 minutes for everything in the market to plan strategies and everything. So chances are like this. So today the market on the pound basically, and you can see the recording of today, we actually were here and we short the pound to take on this sale and never happened. So we expired the transaction here because I knew inflation was coming. So I knew that if they're expecting something different from the actual forecast, then the buyers may attack tomorrow. So we expired the sale, and then I waited for the seller here, and I did not got enough confirmation, so I did not short the pound today. I could not do anything. I did not join the buyers, and I'm waiting until tomorrow. So that means that we are very careful on the trading these days, especially on a week where you have inflation, you have the FOMC, or you have rates going on, you know. So let's take it to the scenario that we expect tomorrow. Now, you have two very important psychological prices in this area. We got the 121 here, which, as I can see, as far as it concerns to the 121, the market is only doing a high here, like it's touching the 121, but then it's not really getting through it, except here. So to me, the 121 looks like a high, you know? So I'm like, okay, well, below 121 tomorrow, I'm gonna short. above 121 tomorrow, I'm gonna short the same, but maybe even higher than this high. So let's give an example. So let's say, okay, the market goes on, Asian market is coming up later, and then I see that the market is trying to push the pound up a little bit more. So the market keep buying, and if it gets through this high, which is today's high, 21.15, of course it's gonna go up to 21.30. You know the map price, you know how it is. So 21.15 up to 21.30, 21.30 up to 21.50, and so on. Now, what if inflation in the UK is not as bad as they say? So it actually gets better. So the pound, it might go up because it means that probably they're not going to hike rates on September. But if inflation is not getting better, they're going to have to hike rates on September, and it may also go up. That's the thing, you know, that you cannot speculate on how the market is going to react, because it's been doing like that, kind of like just taking steps way more in advance than they should, because they say, okay, well, if the inflation is getting better, then they're going to hike the rates, we're going to buy the pound. But also they're going to buy the pound because if the inflation is getting better, they don't have to increase the rates again. It's kind of crazy like that. So we cannot speculate on result. We have to trade on prices only. So what we're going to do tomorrow is this. If you see here on the historical prices, what you see the pound is going down, right? I mean, it's really going down.
Yes.
It's like, that's it. But the thing is, we're facing a transition right now, which is 21 up to 21.15 and 21.30. You know, the prices that I gave you. 21, 20, 21.30 is a transition. What a transition means is this. When the price gets to those highs, two things may happen. It's going to go down, like you see here, but it also may do this and jump towards the 22 and the 22.50. So that a transition means. So you have two scenarios. This is the transition, either a jump on the buyers again to 22, or the market is just testing highs and back again towards the 120. So, and that's why the market is at this point trying to push the pound, but not enough, because they don't know what's going to come up tomorrow, the inflation. So what I'm going to say is this. Well, I'm going to trade inflation tomorrow, and I'm going to let the price go up. I'm going to wait for 21.20, 21.30 levels, and then I'm going to short. What am I going to short? Well, I'm going to have to choose. I'm going to bet on the 21.10 to sell, then to 20.85, then to 20.80. You know, have to see. But it's a very dangerous transition was coming. And then what I'm going to do also is that if the price pulls back up a little bit, I'm going to have to expire the trade, because it means that the market may not go down from that level, and they may push the price to 122. You know, so that is exactly what transition is. You know, and that's been killing trading accounts all year. When you don't read the transitions properly, you might fall into that problem where, you know, you don't know what's going to happen next. So you trust it's going to go up because inflation is good, but then that never happened. Now, the sell scenario is much easier. Like, forget that the pound is going to go up. Let's say that the pound is just not in, like, no power in that. They're not buying on the pound, you know. So how are you going to short the pound tomorrow? Well, if I see that today the pound moved from here up to here, I'm going to say, okay, then I'm going to take a sell price, and you have to bet, you know, there's no other way. So I'm going to bet to start shorting the pound, let's say at 120.70. 120.70, you know. So that's going to happen 120.70 as sell stop with one take profit at 120.53. You know, 120.53. Just forget about this, just focus on map prices. And we know that the map price always moves towards psychological prices. Psychological prices are the round prices. 121, 120.50, 120, you know, these are the psychological prices, the round and the 50 prices. You know, the market always reacts at the psychological price. You know that. The round, the closed prices
Yes.
are the 50. So I'm going to short the 120.70. I'm going to place my take profit at 120.53. So before the buyer attacks here. But then I'm going to have to place another sell stop because if they jump really hard, like the buyer gets out of the bound fully, I want to keep shorting. So I'm going to sell again at 120.46 to take profit 120.30. You know, I don't want to, like, I wouldn't really want to take all the way down. And then you're going to come up to this point that we were today, and you're not going to touch these levels whatsoever. Like, you're going to short here, no problem. You want to short here, no problem. That's a sell market level, and that's a sell market level. That's okay, because you know it. That happened before. But then we come up again to the lowest, which is right here. And it's honestly, the market really pushing on the pound. So I'm not going to touch this price. I'm not going to place any sell stop here, even if I know that I've seen the sell here going down to here. Like, I know it, but I don't care. Some levels, we just rather don't take them. So what I'm going to do, I'm going to wait to see the market. If they pulls back up the pound, I might take the chance to buy. But if it crashes really hard, then I'm going to short again, but below 120. Only below 120. So I'm going to go to 1 hour time frame. I'm going to find the 120, which is all the way here. So I know the 120 and down, I'm going to have sellers. Let me show you 120. So 120 down to target 180, 119.70, 119.80 is fine. And then we keep shorting normally, you know, because I do not see aggressive buyers. But I know it can go all the way down to 118, 117. And so, you know, I can keep moving down. I just want you to understand that the market is full of those transitions that if you don't take them correctly, you might fall into a correction that is into huge volatility. So what I notice is that the 121 is a very important transition. I also know the 120 is a very important transition. 119, important transition. You know, so you want to short the pound, no problem. But at the same way that the market goes down, it also has to go up in order to drop again. You know, it's always like this. It's been always like this. So you had to make sure that you know if the market touches here, the 121 here, eventually tomorrow, it might push the pound up a little bit towards the 21.30, towards the 21.50, and so on. You know, now if it goes down, that's easy. Yeah, we short the 120.70, no problem. And you know what area you're not going to touch? You're not going to touch the lowest here because you know the buyer's waiting, right? You may want to short only at 120 and to 119.80, you see? All right. So you have to keep trading, kind of like thinking in terms of if you short, make sure you don't touch the psychological prices. 120, 121, you know. So if the bond gets better on inflation tomorrow, then yeah, it's going to go up. Like I said, I'm going to take my chances. I'm gonna wait the 121.20, the 121.10, and I'm gonna short there. But I'm not sure if I'm gonna hold it or wait for it if I see that the price closes above my entry price. I'm gonna take my chances, but I'm not gonna hold them up. I'm not gonna take, I had to be smart. Like, yeah, you short the pound because you know the highs, 21.30, 21.20, 21.10, that's fine. But what if the transition there, it turns up to be actually a level that it's going to push the pound towards the 21.80 and 122. You don't want to be holding a sell there, So let's go to the euro now. The euro is actually smoother, not such crazy as the pound. You may want to focus on the euro. Let's do the analysis. What you see here, those are my line prices. So the information tomorrow affects the pound only. What's been happening on the euro since inflation of the United States is just all the way down. Like I said, we use the buyers. These are the buyers. The blue ones are the buyers. We use them to short. And it's going to happen the same here. We use the buyers to get a better price, to short the euro, not to buy. We're not buying anymore. The European Union is not showing any sign of recovery whatsoever. So what we're going to do tomorrow is this. We're going to take the pound dollar. We're going to short it from the 101.60. I'm going to take 101.50. Well, you have the 101.50 here. First, make sure that you know what psychological prices you got around the market prices in your level. So I have the 101.50 here. The 102 is all the way up. So I don't really care about the 102. I care about the 101 down here and the 101.50. So what has been happening on the 101.50 is that, the market may try to buy from here. So I want to short actually below the 101.50. So I'm going to take it from, let's say, 101.48, 101.47, down to take profit 101.38. Well, that makes sense for me, that one. 101.47 down to 101.38. And then one more time, you don't want to touch these prices because these are the levels that the market pushed the price towards these highs. So you're not gonna touch these levels. What you're gonna do is like you're gonna short below this. And it's coming to a conclusion that below 130, then it might keep dropping the price. So I'm gonna have another sell stop. I'm gonna look for exactly where you see buyers again here, buyers again here. You don't want to touch those prices. Buyers, there's all buyers. This is the market price as now. So down here you got sellers and then buyers, sellers and then buyers, sellers and then buyers. You see? So at a certain point, you don't want to short the euro in certain prices that you know that the buyers is really hungry to take the euro up again. And that's right here. We're not going to take these prices down here. So if we short the euro, it's going to happen at below 150, below 130, and that's it. Those are your targets. Your targets are between the 125 and the 120 if it gets there. And that's it. You're not going to trade in anything between 110 and the 010 because we don't know what's going to happen here. If I say, well, here it's going to go up, what if it doesn't, What if the market reacted for buyers here, 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 but then that's it? It's not going to happen anymore. You can't keep moving down? Of course, let me show you. This is the next situation. So basically below the 101, below here, actually 100, 10070, 10060, it's gonna go to 100, it can go out to the 060, 09960, 09953. So you have activity down here, but we cannot consider that the market, because here they bought again, it's gonna happen, you know, because it's been the mistake lately. They consider, well, that's the lowest of the year, that's the historical lowest. It's never been here since 2002. It can't go farther than this. This is the moment to buy, take in, jump in, just take the buyers on euro from here. It might happen, it might not happen. Honestly, I do not take my chances on buyers with the euro. I wait until it gets down here. If I jump in the buyer, I had to be considered and I had to expire if I see that the market is doubting. And then if there's no buy reaction, then I take it as a high. And then I go down again. So those are the transitions that we are facing right now. EURUSD transition right now. We don't know what's going to happen tomorrow. If that's the division that we have between again all the sellers or between all the buyers. We know where we gonna short. Yes, we know what levels we are not going to take as, you know, shorts, as normal sellers. We have to wait, you know, and that's what's going on for like euro, for the pound, those transitions. And why transition? Well, we have inflation of UK tomorrow, but also we have the FOMC on Wednesday. You know, FOMC actually is tomorrow, 3 p.m. We're gonna be on YouTube live if you want to join us. You know.
Okay.
Now, regarding hedging, regarding all of that, you know how it goes. Like, we don't take that much of the risk. You know, for let's say $2,000, we're trading just the minimum, all 10. You know, $3,000, all 10. $1,000, all 10. We don't go farther than this. Not until September, not until the next rates. You know, and you know how it is. Just trade the lowest you can. You know, we have to get through this. Once we get through this, everything's going to get much easier and clear for us. You know, like I said, just the market is full transitions. So hopefully inflation on the UK tomorrow is going to be good. I honestly do not think so. Most likely the scenario is for the seller. But if it goes up tomorrow, we're still going to go for the seller anyway. But not with too much speculation. Like you know, I'm gonna wait and take my chances between 21.20, 21.10. If I see that's just not going anywhere, I'm gonna expire it, and then I'm gonna short maybe in a higher price, and then eventually, if I see there's no way, I'm gonna see. I don't want to be shorting too soon if it goes up tomorrow. Understanding that if it gets above 21.50, for example, that's going to go to 122. That's it. So you have to know when to react and what steps to take next. You know, the easy part is to short the pound. That's the easy part. The not easy part, what if tomorrow the pound goes up and you short in higher prices, but then it keeps pushing. And you know what? Don't hedge it. If you know that you're going to short at 21.30, 21.20, but then you get 21.50 already, you don't hedge this. You cancel that one. You take the loss right away. Right away. Because you know what's going to happen next. If you get the confirmation above it, you get a 122 later on. You know this. Then why you take the chances? You know, just Do not marry. Don't marry your trades. Just, you know my prices. You want 21.50 above it, then just take the losses right away. Then you may change your strategy. You may go from the seller to the buyer, but on the right price, on the right level. Not because it's going to go up tomorrow, you're going to take your chances and buy right away. Because you know why? Inflation is only data. It's not telling you anything about rates. What changed the market direction is rates. It's not production, PMI. It's not employment. It's not inflation. It's rates. So inflation is gonna do some noise, but then it's gonna come up to the projection. You know, rates changes everything. So we had to focus on rates, on meetings, on the European Central Bank, the US Central Bank, on the Fed. You know, that's what changed the market direction for like 6 months, for the entire year, but not inflation, employment, PMI. Okay, because I've seen this. Oh, it's gonna go, oh, it's gonna turn around. It's just only inflation or unemployment or production. I don't know. No, it's not. They're not moving rates. Until they don't move rates, I cannot tell. This is just speculation, you know. So make sure that you understand the difference, because I've seen it. People taking losses like crazy with the NFP or I don't know, production, because it was a huge impact in the market, and they're like, oh, it's gonna go up, and just don't do it. Just wait, hedge it out, keep your mind cold. It's gonna come up, down again, and then you see, you know. Now, if we're talking about rates, well, that's a different situation. And I'm talking about the FOMC tomorrow here. But that might do something, yeah. But inflation on the UK is quite simple. If it goes up, we're gonna short anyway. If it goes down, we're gonna short anyway. You know? So regarding everything else, you'd rather not touch, like dollar yen. It's just the market is for the buyers. Dollar can, everything based on the dollar. It's just honestly not a good idea to do anything with them. Anything. Like, you know, everything starts in the US. If they get into a recession, guess what? European Union is going to get in recession. UK is going to go in recession. Everything is going to go in recession. They start all the mess every time. So since we don't know the direction, if they're going into recession or not, then you rather don't touch the based dollar currencies, the crosses, you know, dollar yen, dollar Canadian. We have to go with what we see is reflecting later what already happened in the US. But we don't like surprises anymore. So we have to get the dollar just there untouched, and then focusing on what we know that is reflecting what is already happening in the US. You know? And regarding everything else, like for example, this Thursday, we're gonna talk about pivots, pivot points. So if you're there, I'm gonna make sure that I give you the right translation. But again, the pivots, knowing how crazy the market is getting, it's not gonna do any favor if you know the pivot points, how it goes. Like it's like can't get through it tomorrow night. It's just pivot points are good, but it's not gonna make any difference in your strategy. We have to focus on prices, and that's it. You know. So I don't know if you have any question with these topics, but I kind of give you the perspective of what's going on. You know, like try, and I want to make sure that you're safe enough, even when you practice in your demo. You know. So you got any question?
Yes, thank you very much. In terms of targets,
Yeah.
of course, we normally use price levels for targets.
Yes.
But I observe in recent times that the pivots can also help, the pivot prices can also help for targets, like profit targets, either for a buy or for a sell.
Yeah.
What do you think about that?
Well, uh, typically the market in one scalping transaction, you may want to go for a goal of between 8 to 15 bits per transaction. Of course, this may change. In one trade, you may take 20, you may take 30 because we work on the open market. But if you are in a tiny market level and you see that it's just getting too slow, if your trade is on the open market longer than, let's say, 5 to 8 minutes, you may want to cancel and take that profit. I've seen that happening many times. You are in the open market. We expect to take the profits as soon as we can, to be on the market 1 minute, 2 minutes, 3 minutes, 5 at the most. If you're taking longer than this, just want to catch on your profit and leave. So I want to make sure that you understand the expirations rather than target, because you expect from the market, like I said, 8 to 15 pips or 20 pips in one shot. But if you enter the market, let's say you sell, right? You sell at 21.10 on the pound, for example. But then the 15 minutes that you're trading with, it closes at 21.12 or 21.15, then that means you have to expire the trade. It's not closing, or it's not getting you to where you want to be. It closes above the 21.10, that means the expiration right away. You don't need stop loss, you don't need anything like that. You know it. If it closes below 21.10, you're safe. But when it comes to transitions, make sure that if you are shorting, like we did today, for example, at the lowest on euro and pound, let me show you. Like today, we were shorting here, right? So I said, okay, well, I'm going to short below 0140, that's fine. But then what happened? I'm in 15 minutes now. So this is what happened. This sale right here, it was okay. We kept it. Then we tried to do the same. But you see this shutter right here? I say, you know what? We'd rather be out. And then the 15 minutes later, I actually reached the target. What you see here, it was green before. It was sellers. And then it closed above the 0138 and 0140. And I said, that's it. It's not going to happen. You cannot repeat the same sale because I do not see sellers anymore. And then what happened? The buyers jump in. They went up. Some sellers, but you see, it touched again the sell price 0140, but only touched it. To me, that was not the sell anymore. So I would try to use the 0140 as much as we can to short, then to target 0130. That was a good target. That was 10 pips. 10 pips is good enough. Just go for the 10 pips. But then it got slower here. So we took the profits a little bit before. It got slower here. We took the profits a little bit before, and same here. So profits are not the thing. Just 8 pips, 10 pips, that's fine. Because you know that it's not getting through the low, not getting through them. So, well, you know what, I'm just going to do as much as I can. But I know that whenever it's just not respecting the 0140, I would get out, So we were like smart enough today to react. That was like 5 minutes or 8 minutes waiting for that sale. Because you get confident, one sale's good, one sale's good. You want to go for the third time, that's it. So we expired that one before it was too late. And look what happened later. So the target between 8 to 10 pips, that's fine. You're going to have those moments that it's going to jump all the way. It's going to give you 15, 20, 25. That's good. We don't rush, but we also react. So there's two qualities you want to gain to be a right trader scalper. You want to be fast enough, but also enough patient with your profits. When you can be patient, you are patient. When you cannot be patient, you are not patient. I know it's like whatever, but that's what it is. When you know you can let your profits run, you let them run. But when you know you had to be smart because the buyer may catch you, you want to take it out as fast as you can. And that's it. That's the catch of the day. 10 pips, that's good. You know, because those are the levels that can get you in trouble. You know, so those lows. You know, today was a good example. Well, Asian market is starting right now, and they might take profits. Yeah, they're taking profits out of the pound, out of the euro. But we'll see. Like I said, we have inflation tomorrow. We have the pharmacy tomorrow. Anything can happen. Again, I already told you what to do on the sale with the pound. Now, a smart decision, it could be to only have the sell stop on the pound without a take profit. You know, so you may want to have a sell stop 120.70 and then wait for the final impact, because what is the final impact gives you all the way down to 120.50, but then there's no buyers here. It's going to keep running then to 120.40 and 120.30. So if I were you, and you can trade it live, only place the sell stop without a take profit, because again, it can crash big time. If you're going to do it live, go for the take profit, you know? Like I said, if instead it goes up, you have to take your chances and to know where to sell. You had many prices to short because these are many highs on 10. Like I said, you have to take your chances. I say, okay, I want to short 21.10. I want to short 21.20. But as soon as I see that closes above my entry price, I'm out. Not even if it closes above, if it pushes above, like if the reaction, you know, I'm out. I'm not waiting. I'm not going to face to have a sale here knowing that the possibilities are to short at 21.50 or even better at 122. You know what I mean? And I've seen that happening many times. They know they are selling in a transition. They short there. They don't take the loss fast enough. They keep waiting and waiting. And the price, then they have to hedge. Avoid the hedging process. You know we can reach 21.50. You know it can reach to 122. What would you like to hedge if you know you can take a better sell price, you know? That's very important. Also on the euro. You know the euro. You have the highs 102. You have the highs 102.20. Yeah, if it goes up tomorrow or whatever day, I'm gonna short the 102, 102.10, 102.20. As soon as I see the market tries to push us again through these highs, I know I can face the 103. So why am I gonna hold the sell here if I can short in a much better price, you know? So you have to be at this day smart enough to understand also the transitions, all right? So that's the biggest advice I can give us today. Yeah. So yeah, like I say, in terms of the daily videos, you have them here on the channel. You know, you can, it's this, that's the trading session is fully translated, you know, everything. And update on Asian markets. So some days, 2 videos on the same day. Some days there's only 1 video, you know. So here says that tomorrow we have inflation of UK. And I said the preference is to short below 120.90. euro to short 0.170. The dollar is, we wait on the buyers. Commodities, we wait on the buyers, you know. But I give some insight here, and that's in the community, you know. So I'm going to upload this information so you can check it, you can study from it. But what's going to keep you safe, Sam, is first to trade the lowest you can on total capital, even if you're practicing. And then secondly, expire the trades that you know you're facing a psychological price, and it's not going to do any good for you if you wait on it, because you know you can do better. You know, you can also always short in a better price, in a higher price. You know, just remember that, because I've seen it happening many times. People just waiting on the price, and it's gonna go down, it's gonna go down, and yeah, it's gonna go down. But then after what? After 100 pips, after 200 pips, you don't want to wait that long. You know, so always the strategies has been the same. Always short the euro, always short the pound until September. And honestly, we have September right next door, so we're gonna keep this strategy, but we have to wait until September. What's going on? You know. All right, Sam, I'm gonna stop
Okay.
the recording so it's not get too long for you.